All right, good afternoon, good afternoon. Welcome to today's video. Today's video is going to be a weekly market outlook over the upcoming week of September 9th till September 13th. And let's get right into it. All right, so first thing is I do want to start off with what the economic calendar looks like for the upcoming week. So we do have core CPI at September 11th, and we have PPI on Thursday, September 12th. So we have pretty, impactful news this week. CPI is a really strong, strong event that brings in a lot of volatility. Usually is a straight up move or straight down move, but the previous CPI, we actually had a ranging CPI, so where CPI creates a range where we take out the previous session's highs and lows and we trade within the CPI range. And I can do that. I can do a trade recap over the trade I took last CPI actually. But coming into the weekly market outlook, I always start my analysis on the dollar and how we are trading on the higher time frame. So, as anticipated last week, we created a weekly SIBI here, and we traded up into the weekly SIBI, and we actually had a bearish reaction to it. So what I mean by bearish reaction, well, we traded lower here on the daily time frame. So these are the daily candles right here. Those are the daily candles. And notice how we created a daily SIBI after trading into a daily or a weekly SIBI. So we displaced lower on the daily time frame after coming into a weekly SIBI. So we had a bearish reaction. So coming into this week on the dollar, I am anticipating here for prices to retrace back into this daily fair value gap. Depending on how we treat this daily fair value gap will tell me if we are going to be bearish or bullish this upcoming week, because we should treat this daily fair value gap as resistance to continue lower and finish out the the monthly power of 3. And and you're probably wondering, like, what do you mean by weekly power of 3? Well, based on this monthly candle, I can anticipate for this monthly low to be taken, for the previous monthly low to be taken. But like I said, we have to respect the daily fair value gap this week, or if we disrespect this daily fair value gap, we will most likely get a revisit to this weekly SIBI here. So I don't like how we traded on Friday, because Friday indicated that based on this Friday's closure, I can anticipate for this daily fair value gap to be revisited. And like I said, simply based on power of 3, based on how this daily candle closed, we can anticipate for the daily high to be taken. And why will we take out daily high? Well, prices moves for 4 reasons: to take out liquidity, to target liquidity, to rebalance inefficiencies, to retrace back into equilibrium of the range, or generate new structure. And so what's the reason of prices trading up higher here? Well, we need to take out the Friday's high of day, and we need to rebalance the daily fair value gap, I guess, a little bit more. But like I said, if we trade higher and close above this daily fair value gap, this daily SIBI, then my objective, my intra-week objective would be to see a rebalance of this weekly fair value gap. But yeah, that's what I have in mind for the dollar. Monday, I am anticipating some sort of higher prices if we can respect this 4-hour fair value gap. So there's a lot of if-then statements in the way I trade. If you guys haven't noticed, if we respect this daily, or if we respect this 4-hour BISI, we should get a movement upwards to target the daily fair value gap. And if we respect the daily fair value gap, then previous week's low would be the objective. If we disrespect the daily fair value gap, then previous week's high would be the objective. And yeah, so that's it for the dollar. I do want to go on to the NQ now. So with NQ, how we traded last week, if you guys watched my previous weekly analysis, I was calling for higher prices because we created this, massive weekly fair value gap here, and this weekly fair value gap should have been respected if we were going to continue higher. However, we didn't respect this weekly fair value gap, and we actually closed below the weekly BISI. So this to me is indicating bearish price action. And if you guys take a look on the weekly time frame, there is a reason for us to be disrespecting this weekly fair value gap. We traded into the last up close candle of this down move, which is a bearish order block. We traded back into the OTE of the higher time frame dealing range, and this right here is a market structure shift. We trade back inside this weekly fair value gap. We trade higher, and then now we break that swing low. This swing low should have been respected. However, we displaced below it, and yeah. So now, for me this week, I would anticipate for prices to take out previous month's low, and this is the higher time frame. This is like the weekly time frame telling us that the monthly time frame were not bullish. I was basing my my analysis on the monthly time frame here, and the way the previous monthly candle closed, it suggested higher prices. However, once we got a complete closure below this weekly fair value gap, that is telling me, okay, well, higher time frame, now we are starting to shift bearish. We should have respected this weekly BISI here if we were bullish, but we completely closed below it. So for me, this upcoming week, I would anticipate for previous week's low to be taken, and I want to see prices completely disrespect this bullish OTE here. So I don't want to see prices show respect to this OTE, and I want to see prices just completely collapse below it to attack previous month's low, and I want to see us target April 19th low, January 18th low, and so on and so forth. But yeah, NQ, lower prices. Objective for next week, I want to see previous week's low get taken, and depending on what CPI does, will tell me if we are going to attack previous month's low or previous month's high. But like I said, my intuition, my technical analysis is telling me that we are going to attack previous month's low, but anything could happen. So just wait to see what CPI does, because like I said, CPI usually is a straight up move in one direction, either up or down. But yeah, NQ, lower prices. So ES, what am I anticipating on ES? Same thing. We have a higher time frame SMT here with the ES and NQ. ES, we took out previous month's high. However, on NQ, we did not take out previous month's high. So that's SMT. That's the very first thing that I noticed, is that there is a higher time frame SMT. And the way we treated this weekly BISI on ES, we completely disrespected it. We closed below the consequent encroachment, and this upcoming week on ES, I am anticipating for prices to take out previous week's low, and yeah, depending on how bearish we are, then I would just watch. But like I said, I am anticipating previous week's low to be taken, and we do have some other sell sides that we could target over here. But yeah, so NQ, ES were bearish for the week. After we take out previous week's low on both the indices, I would trade intraday models. But yeah, if you guys join my Discord, I do post intraday intra-week market analysis. So I don't really post intra-week market analysis because I feel like that's a little bit too much, and if you guys join the Discord, it'll be all there. There's no need for me to make a video, but yeah. So I did say that I was planning to do a trade recap over the previous CPI. So let's try to find that. So what was my previous CPI trade? It was September 13th. So oops. All right. So actually, it was August 14th. It wasn't here. Was it here? Oops. No, it wasn't. Was it August 14th? I remember we traded the range. Oh, it was this one. So August 14th. Let's go into the actual charts and I'll show you guys what I did here. So August 14th. So like I said, usually CPI tends to be a a straight up move or a straight down move. However, the previous CPI that we had, we actually took out both sides liquidity. So we took out London lows, London highs, Asia's highs, and Asia's lows. So we basically created a new dealing range here with CPI numbers. So notice how we took out both the dealing ranges highs and lows, and we created a new dealing range. So the trade I actually took on CPI during the morning was based on how we were going to attack the CPI range low. So on the 1 minute chart here, you guys can see a little bit clearer, but like I said, CPI, we took out the low and then we took out the high. After we took out here, let me mark out the swing high and swing low for you guys so you guys can see it a little bit clearer. But here we go. So on the 1 minute, like I said, CPI here, we opened up on CPI, we take out the swing low first. After we take out the swing low, we take out the swing high. So now we have a new dealing range here. This is CPI lows. So I'll make CPI lows the color purple, and CPI highs the color purple as well. So after we take out, like I said, the previous dealing range highs and lows, we create a brand new dealing range with CPI numbers. So after we create that new range, prices trades up higher, and then we take out the CPI low, or sorry, CPI high. So after we take out CPI high, notice what happens here. We take out CPI high, and then we start trading lower. So this is telling me, okay, well, we're probably going to attack CPI low now. And I want to note out how these 15-minute candles are being created. These 15-minute candles are suggesting me that, hey, we're bearish. Based on this 15-minute candle, what can we anticipate for us to take out that 15-minute low? With the very next 15-minute candle here, this is what I frame my trade around. So this 15-minute candle suggests that we are going to continue lower. So I take a 15-minute model, but there's time frame alignment here. The 15-minute low is actually the 30-minute and the 1 hour low as well. So all three time frames here are now telling me that we are going to continue lower. So we have time frame alignment between the 15-minute, the 30-minute, the hour. Is there displacement on the lower time frames? Well, I mark out there's this 5-minute fair value gap here. So on the lower time frames, there is a 5-minute fair value gap that suggests the idea of us trading lower, attacking the 15-minute, the 30-minute, the hourly low. And keep in mind that it is also in narrative with what CPI is doing. We're targeting CPI lows as well. And I'm going to go back to the 15-minute time frame here. But I want to take a look at how this 4-hour candle closes as well. This 4-hour candle closure is bearish. So on the next and the next 4-hour candle, we can anticipate that 4-hour low to be taken. And that 4-hour low is actually CPI lows. So on the 1 minute time frame, I mark out 4-hour lows and CPI lows because they are the exact same lows. So now I take my entry when prices trades back into this 5-minute fair value gap. My first partial here is to attack the 15-minute, the 30-minute, and that hourly low. After we take out those, that low, I move my stops to break even, and then prices continues lower to attack 4-hour and the CPI lows as well. So with that is my trade for CPI, for the previous CPI. And yeah, notice how there's so many confluences to this trade. Time frame alignment. There's the lower time frame model is in alignment with the higher time frame narrative. Higher time frame narrative is telling us that we're continuing lower. And the model that I'm taking is a bearish model. So it's an expansion model. And yeah, there is this idea of a breakaway gap as well. So this 15-minute fair value gap, right? So once we close here on this, once we closed on this 15-minute candle, notice how we create this 15-minute fair value gap. Are you anticipating for prices to open here and retrace all the way back into this 15-minute fair value gap and then continue lower? No, this 15-minute fair value gap should be treated as a breakaway gap. I don't want to see prices trade all the way back up into this swing high, and I want to see prices trade into a lower time frame fair value gap and then continue lower. And then after we take out the 15-minute and the 4-hour low, then we can trade back into it. It doesn't really matter to me, but I'm taking that small bite of the market. And yeah, that wraps up my video for the weekly market analysis for September 9th till September 13th. And I also did a trade recap over the previous CPI trading session. And yeah, thank you guys so much for watching, and until next time, peace out. Skadoosh.